Okay, very good morning. It is 15th of March, so I hope everyone is well. I'm going to talk over a couple of things. We've had Larry Kudlow confirmed in terms of then the new economic advisor, given the ousting or resignation of Gary Cohn, so we'll have a look at that. There's actually been a little bit of movement as well in a Senate vote last night about regulation of the financial sector in the US, and there's not a lot of people talking about that this morning, I've noticed, but I think it's definitely worthwhile just recapping that and what the situation is. And then we're going to have a look at the day ahead and the charts and what we're looking out for from the session. So first off, as per usual, just taking a bit of a cross-check of how things are sitting at the moment, and it's relatively quiet. I'd say of the news, let's say on the fundamental side that I'm going to talk about, really there's nothing too significant that I think would ultimately make you want to jump in and start having a really definitive bias on this market, and I think that's largely reflected in prices this morning. The dollar index is basically flat. If you look at both the major pairs, Eurodollar and cable here in the top left hand corner, equally it's basically unchanged on the session. This comes after a down day on Wall Street, but losses were relatively contained. The big kind of ongoing theme is that of heightened risk of trade wars, and that kind of leads us then into Mr. Kudlow. And so let's have a look and a revisit of what exactly it was that he was saying. So again, this is the replacement of Gary Cohn, and I'll read you through some of the things that Larry has said last night. The incoming economic advisor signaled that President Trump would support a strong dollar and pursue a second phase of tax overhaul to make cuts permanent and take a tough line on trade with China. So if you think about it, if Gary Cohn wasn't a yes man, well then you've got your yes man right here, because he wants to take a tough line with trade on China, where even though we knew that these recent tariffs on the likes of steel and aluminium were going to have a most severe repercussion on the likes of Canada and Mexico, really it's China that was the campaign promise from Trump, and that's what he's looking to deliver on this kind of trade war that seems to be ongoing at the moment. A few other things though to be aware of. So Kudlow, who for someone in such a senior position, usually you don't see them appear so vocal on these types of top level discussions, but Larry Kudlow has been a CNBC contributor for quite a while, and if anyone of you guys watch CNBC, you'll know full well it's a little bit drama Hollywood style, and I don't think Kudlow could help himself. Yesterday he said, quote, "I would buy King Dollar and I would sell gold." I don't think the script writers could make this stuff up, but what he also went on to say was he cited a source who hinted that Trump telling him that Canadian Prime Minister had been on the phone with the president making concessions on NAFTA negotiations hand over fist. So if you were looking for how is Kudlow going to play this from a kind of a communication point of view, well, he's already not pulling any punches at all. Even on the subject of monetary policy, if you remember, a central bank and a government are supposed to be very independent of one another. Same case in the US, but Kudlow said, he kind of waded in on the issue, saying that central banks should not overdo it in raising interest rates. Growth is not inflationary. Just let it rip, for heaven's sake. Quote, he said. So, you know, almost as eloquent as Mr. Trump himself. But obviously what low interest rate environment does from the standpoint of interest rates, certainly the slower the better in terms of equity valuations, as we've seen, and that certainly helps Trump in the PR side of things, trying to push what he's doing is making, you know, America great on the street is defined by the strength of the stock market from a political point of view. And just talking to one of the guys here, Steve's come back in the office, one of our kind of former traders, and you know, it's really, you know, not to go too far into it, but what I think is actually incredibly interesting is that everything Trump is doing is everything Trump said he would do, unlike pretty much every other politician I can think of in recent times, particularly in Western Europe, where you get a lot of promising and a very little delivery. Trump is delivering at the moment, you know, like it or not. And you have to think about, for me, bigger picture, when it comes to trade wars and the point of escalating to real, as we know, the retaliation effect that this could have with the likes of the euro area, the US trading with China and other partners, highly detrimental. But what I think is, I don't think it's going to get to that point. Obviously, markets become a little bit nervous, just given the fact that senior people like Cohn and Tillerson have left. But ultimately, you know, is this just, you know, really direct strategy from Trump politically to just continue to garner further support from delivering on what he said he was going to do? So yeah, it's an interesting one, and I was just thinking this morning, imagine if Theresa May took a Trump-style approach to Brexit. You know, who am I to judge? Would this be the best or worst strategy? I don't know, but if you think about what it is, what the people of Britain voted for in June 2016, it was to leave Europe, and as such, if she took a very, very strong, aggressive, vehement stance and said, we're doing this, like it or lump it, it would just be interesting to see what would happen. One thing I think for sure, she would be incredibly popular. And I think that's what's happening in the US with Donald Trump. And this obviously is a little bit of positioning, posturing ahead of the midterms, which are going to come later on this year. So yeah, just interesting developments ongoing at the moment in terms of the US. Talking of the US, this is the legislation that changed last night. Now, not a lot of people are talking about this, but this is one thing which saw really strong performance in the financial sector and helped certainly US equity valuations get to record highs in 2017, given that the financials are the second biggest component after tech for the S&P breakdown. And so what's happened here is there's been a major overhaul of the US financial system's regulatory structure that got passed by the Senate last night. And it wasn't just passed, it was pretty overwhelming. It was a vote of 67 to 31. So this then is looking to push to relax some of the most stringent post-financial crisis regulations for dozens of banks. To give you a bit of a picture here, going back to the kind of 2009-2010 era, so post the kind of collapse of Lehman's and the kind of credit crunch period, the repercussion from the politicians was to put very overarching, stringent rules on the financial sector, kind of in a way to not only safeguard the system, but to make a political, moral standpoint in that respect, so that, you know, in terms of how the people felt, the banks were being punished for the amount of risk that they were taking. So let me just cover off a couple of things here to make a bit more sense of this. So what's happened, there's been what's called a SIFI change. Now, SIFI stands for Systemically Important Financial Institutions. So these are kind of some of the buzzwords that were around several years ago. But banks with the SIFI designation, basically, they have to adhere to stricter rules and oversight because their failure is seen as basically a danger to the economy. So if you think of all the biggest banks in the world, most of those are classified as a SIFI. And so if they were to go bankrupt, it would cause destabilization to the financial system. So we're not talking small banks, we're talking with the real kind of big guys. What this has meant then is those bigger banks basically needed to have what's known as a living will, which is a predefined plan that if they were to hit on financial hard times, that they would have a cohesive plan of unwinding the bank and selling of assets in the event of a bankruptcy. So in order to avert the kind of uncertainty that triggered the kind of main catalyst of negative sentiment to the selling in 2009 in the equity market, by having these plans in place, it should give investors confidence that we're able to deal with a repeat situation. What happened last night, though, is the increased threshold to 250 billion in assets from 50 billion. Basically, what's happened is the amount of assets that a bank has been dropped back down. So it got lifted to $250 billion. It's been put back down to $50 billion. Because what this has done then, basically it means that regional banks, so some of you might have recognized some of these from the financial crisis, BB&T, Fifth Third Bank, SunTrust. Basically, the previous rules meant that at 50 billion assets under management, those banks needed to be included as SIFIs. However, the ruling last night has bumped this back up to 250 billion, which means those regional banks can now operate under less stringent conditions. Now, this obviously divides the political spectrum quite sharply. There's those that believe that this is the worst thing ever, because you're just going to create the possibility of a repeat of the subprime crisis, and because it means then that those banks that are still incredibly large but not the biggest don't have to be so stringent with their capital levels and so on and so forth. To give you an idea, one of the key big names that triggered the subprime crisis was a company called Countrywide Financial. They were one of the biggest mortgage lenders in the US, and they were one of the first to really get hit hard, and was a real catalyst that sparked off the kind of subprime move. They had assets of 210 billion. So under the new rules that have passed, they now would not be classified under this catchment of SIFI, which is quite worrying in that sense. The point of this, though, is that obviously by lowering the regulations, it should allow the financial sector more freedom to be able to operate. And then the opposite view, of course, is that obviously the central bank is going through these primary dealers and then regional banks in order to liquidate the system into us, the consumer. And so this is a net positive for the economy and for the financial sector. If they can operate freely and deal with each other, it should then create a more kind of liquid environment in that sense, which should provide cheaper borrowing rates, for example. So yeah, I just thought I'd kind of recap that, because this was, again, Trump has delivered on tax, and now he's delivering on rolling back of stringent rules in place for the during or post-financial crisis. He's talking about his fiscal spending plan that he wants to do. He's talking out against Russia. He's talking out against China. The guy is delivering at this point from a political point of view, economically. Obviously, there are, if we look at the S&P here, obviously the market is a little nervous about what does this really mean. This was, let me just highlight a bit of the journey we've been on, because it's been quite interesting actually. And that was non-farm payrolls. So this was when, scrapped the headline 313,000 jobs. The market's focused on inflation, and the wage data disappointed. Interest rate then expectations kind of pulled back in terms of the Fed turning hawkish anytime soon. Equities rallied back up. So in terms of further reaching price points, then obviously it's defined a pretty good level for us going forward in the coming days and weeks at that 28 handle, 28.05 in fact was that point. Quite an interesting upside level of resistance though. Here's where we're trading at the moment this morning, 27.58, and you can see we've now printed a double top here in recent price action, but that level at 62.5 looks pretty interesting for the points here that you can see. So after the payroll initial reaction, you can see we hit some resistance at around that point, before then the eventual break came later after really Wall Street hours continued and the bid continued. Found some support. This would have been back on Tuesday session, broke that through in yesterday afternoon. And here we go, we found some resistance overnight in Asia and first thing when we've stepped in this morning. So if I was looking at near-term levels of significance in terms of the range, that's a pretty decent resistance point there on the upside. On the downside, obviously that first area that I'd be looking at probably is the overnight low, 27.45. You've got then sandwiched below there the S1 level, and then 27.39, which is kind of the payroll lows or pre-payroll move low, and then some resistance that we're seeing back on the 6th of March. So that's the kind of range I'd say in focus today for the S&P. At this point, do I have much of a bias for direction? it's a bit of a tough one to call, and when it's like this, I prefer just to let the market be my guide rather than trying to call it myself. And so I think the more prudent approach is kind of picking decent levels and then seeing how it reacts at around those price points. I mean, interestingly, where we got to in the overnight Asia low before bouncing was exactly to the tick where we were when payrolls came out. So now we've taken that back. The only thing I think that's going to risk this is if Trump starts to pick up the kind of trade rhetoric, i.e. making more aggressive, will that make people more nervous again to then break through these levels? I think now the market's kind of got a little bit accustomed to that talk. The fact that Kudlow's come up, reiterated the same kind of fairly strong stance against China. Yes, the market moved a little lower overnight, but it's remained fairly comfortable this morning. So I think that's a pretty decent point of support around that 27.45, and obviously you've got the S1 there. Could be interesting to play the market back up towards pivot there as a potential idea. Just while we're on the charts, I was just having a look at the euro and cable this morning. So just having a look, we're sub pivot. And as I said, the dollar index is basically flat. There's not a great deal going on. The calendars we'll see for this morning really is pretty quiet. And as I've said kind of throughout this week, the market's being driven by the Americans at the moment in terms of a driving macro theme. Trump, trade, that's really key. We've had key economic data points so far in the US this week. There's not too much today, more to come tomorrow. But it's really kind of been US-led at the moment. Europe and UK, things are relatively quiet. So just having a look at euro dollar, downside, there's quite an interesting level of support at this 23.51. I'm looking at the euro futures, of course, here. Just around these points of what we had, resistance to the beginning of the week, kind of Monday overnight going into Tuesday. We eventually broke through that. However, we have found some support yesterday afternoon. So I think that level will be pretty strong if we were to get back down to that point. I guess bias on the dollar at the moment, with risk of trade talk, or in a sense escalating, i.e. becoming a further negative for the dollar, might mean that that level could be pretty good to hold. And if that case, then looking at a pushback back up to pivot, and then you've got the overnight Asia Pac range high, and then pushing back onto well, you've got the 124 handle. And then just above there, the R1 and yesterday's high. Looking at cable, a little bit of Brexit news. I mean, this is regular now. Obviously, as a talking point, you know, the papers love just talking about Brexit at the moment, and they also love talking about Russia, of course, just given the incident with the poisoning of that Russian spy on UK territory and the stance that Theresa May has taken. And obviously Theresa May is going to use this as a political point to be made. Obviously she's under pressure delivering Brexit. What better than to speak out and be fairly harsh and direct with the Russian government on how you're going to respond to this kind of security incident that's happened. It kind of gets that sentiment back on track of sticking up for Britain in that sense. So I think a lot of this is political. The Russian development, I don't think that's going to escalate beyond what's going to move meaningfully and impact, say, the pound currency at this point. Headlines this morning, obviously you've probably read the front page of the FT is talking about Unilever chooses Netherlands over the UK for their corporate base. So this obviously, the FT is fairly in line with being more, as Bloomberg very much so, a Remain publication. So you've got to look through that a little bit. And actually, when you read the details, this isn't going to equate to anything near a large loss of jobs in the UK. But obviously the papers will make a mountain out of a molehill and suggest that this is the beginning of this exodus of big multinational firms moving out of the UK into mainland Europe. So again, I don't think this is really a point of where I'd be thinking, right, fundamentally I want to be short sterling at the moment. But it is certainly something where this type of headline could definitely pick up pace if she doesn't deliver this transitional deal, or at least clarity on the path to that, when we have this really important meeting this time next week, actually, 22nd and 23rd of March. That's when the big financial corporations have said that they could be enactioning their contingency plans. So having a look at the pound, again, pretty quiet. You can see here we've just edged down to pivot, and that really was the area of that we bounced late in the US session last night. Let's just have a look, a little bit of a broader time frame in cable. I was just kind of having a look at a couple of levels this morning. An area that looks fairly interesting. You've got a trend line from going back to the 8th, this kind of progressive move higher. Don't forget, this really hasn't been this kind of overall move that we've seen here. It's more been a byproduct of this trade rhetoric from the US, which has been to the detriment of their own currency. And through that period, obviously the pound has benefited, and so cables just continue to edge higher. So that pivot level just below there might be quite interesting to watch, to see how it responds to this kind of move higher that we've had. As I said, if I had to pick a bias, I'd probably say I still would remain more of the view of going long at this point. And on the fact that on the balance, I don't think there's much in a way that's shaking the pound yet. That's going to obviously change next week. But I'm looking more at the dollar at this point. And if the dollar remains on the weaker side, then maybe some of these support levels might hold up. So maybe if you went in even at that trend line, if it came down to it, you've also got that level there I've got marked up at 139.43. Looks pretty good. That was the support point from this time yesterday morning. Also the previous day, and it was around a similar type area you can see on previous occasions that we've had fairly close to that level. So yeah, I'd be keeping an eye here. On the upside, obviously, if you were in that trade, the obvious point is the high that we had as the weekly high, which also lines up with the 140 handle, which, if I remove that, is your R1 today. So that's a pretty significant level. If we manage to get above there, and you get the chance for maybe a classic entry on the long, then you could look to be targeting up at around R2, and then the bigger target would be up at that 140.82. But to get that type of move, I'd probably be looking for something more dollar inspired on a headline, talking about this trade war heating up. So that's kind of my view on the pound for the moment. All right. Let's just wrap things up, have a look at the calendar at the day ahead. So we have already had the Swiss National Bank interest rate decision. No surprises, interest rates on hold as expected. The Norges Bank is coming up momentarily, but very specific, of course, for their local currencies. You have got the IEA monthly report, maybe worth a consideration for any oil traders. Oil is basically flat at the moment. It's trading around close to its Asia low at the moment, so maybe worth just keeping an eye out for that report, and particularly compliance levels with OPEC, which obviously have been up at the 140% compliance, the highest they've ever been. They still remain very committed to this supply deal. But US output, we saw yesterday in the DOE numbers, continues to move higher. So the Americans are still adding supply. Which is kind of obviously counterintuitive to these cuts. So maybe just keep an eye on that lower bound of the kind of when we came into the market this morning, 60.90. There you go, just seeing a run through that now. So pivot downside at 60.79, just around there. So session lows just printed. Otherwise, the US session, as I said, nothing really too significant that I'd say would really make me await a trading decision, let's say, or that I think would inspire a catalyst for real extreme price movement. New York Fed manufacturing, weekly jobless claims, Philly Fed, all of these of course need to be monitored, but I wouldn't be expecting too much from them today. Again, I'd say attention's elsewhere on bigger kind of Trump-led focus. And that's pretty much it. Bund traders, final point, if you are looking at fixed income futures, you do have quite a bit of supply coming in from the Tesoro and the Tresor from France and Spain this morning. Cumulatively, it's a pretty chunky amount of supply, so you might get a bit of short setting in the Bund to accommodate for that. All right, that's it. 9 o'clock, so I'll leave you guys to it. Have a good day. I'll be in the chat room, so any help that I can give you, more than happy to do so. All right? Take care. Thank you.